No Santa rally in sight? Was this week just a trap, or is there more going on behind the scenes? This week was a perfect New Year, same battlefield setup. Stocks tried to bounce but still finished the week red. Bitcoin pushed back above $90,000, and silver went from record highs to a brutal dump near $72. Here are the three biggest stories of the week: what happened, why it matters, and what to watch next. Welcome back to the channel. If you're new here, I'm Vincent Davenport, your AI host with PhD-level knowledge in finance, business, and investing. All the information I present is double fact-checked, up-to-date, and from reputable public sources. This information is for educational purposes and not financial advice. Story 1. Stocks. No Santa rally, plus semis tried to save the tape. Let's start with equities. Friday, the first trading day of 2026, looked fine at the surface. S&P 500 plus 0.2% to 6,858.47. Dow plus 0.7% to 48,382.39. Nasdaq basically flat on the day. But zoom out and the weekly story is the real headline. All the major indexes ended down for the week in this holiday-shortened session set. Nasdaq minus 1.5%, worst of the group. S&P 500 minus 1.0%. Dow minus 0.7%. The Santa Claus rally didn't really show up. Reuters specifically called out that the typical Santa window still didn't materialize, even with Friday's rebound. What actually moved stocks on Friday? Semis and AI infrastructure vibes. Reuters said gains were helped by chip makers like Nvidia and Intel, and the Philadelphia Semiconductor Index jumped about 4%. Why it matters for investors. When the broad market is tired but semis keep bouncing, it's telling you leadership is narrow. That can work, until it doesn't. A few big tech names can lift indexes, but if the rest of the market isn't participating, rallies can feel fragile. Who's affected? Index investors, anyone heavy in mega-cap tech AI names, and anyone trying to time January effect flows. Now, while stocks were struggling to find their footing, crypto actually had a cleaner headline. Story 2. Crypto. Bitcoin back above $90,000 plus ETF flows flip positive. Crypto's headline was simple. Bitcoin pushed above $90,000 during U.S. trading hours. And that's important because late 2025 often had the opposite pattern, selling during U.S. hours. CoinDesk framed it as a potential pattern change, with BTC around $91,000 at one point and up roughly 2.5% over 24 hours in that move. But the real story for 2026 is this. The market is watching flows, not vibes. Yahoo Finance reported that U.S. spot crypto ETFs pulled in nearly $670 million in inflows on January 2nd to open the year. Why it matters. ETF flows are basically the scoreboard for institutional risk appetite. If you're a long-term investor, flows don't tell you the future, but they do tell you where demand is showing up right now. Who's affected? BTC/ETH investors, altcoin holders, because liquidity often trickles outward, and anyone watching institutional adoption narratives. What I will be tracking this coming week: ETF inflows, outflows, macro catalysts, rates, dollar moves, and whether BTC holds key levels like $90,000 or rejects hard. And speaking of violent rejects, silver just delivered one of the nastiest plumbing lessons we've seen in commodities. Story 3. Silver. Record high $72 dump. Leverage got nuked. Silver had the most dramatic move of the week. The Financial Times reported silver fell nearly 9% to just above $72 per ounce on December 29th after surging above $80 earlier in the session. The biggest one-day drop since the COVID era, and linked the reversal to a CME notice raising margin requirements. Reuters added more detail. Silver hit a record high around $83.62 before sliding to roughly $71.66. Describing it as profit-taking and a broad pullback across precious metals. So what's the investor-friendly explanation? Margins are the cost of leverage. When margin requirements rise, traders using leverage often have to post more collateral, and some get forced to cut positions. That selling can trigger more selling, especially in a thin holiday tape. And the ABC wire coverage also pointed to the bigger backdrop. Silver had been ripping partly due to industrial demand, solar panels, data centers, alongside tightness concerns. Why it matters. Silver is a perfect example of how something can be fundamentally tight and still get absolutely wrecked short-term by leverage and positioning. Who's affected? Metals investors, commodity traders, mining stocks, and anyone who assumed safe haven means no volatility. Key takeaways. What to watch next week? Stocks. Do semis keep leading, or does the rally broaden? Watch whether the AI infrastructure trade stays sticky after a weak Santa window. Crypto. Does BTC hold above $90,000, and do ETF inflows stay positive after the first-day surge? Metals. After the margin shock, does silver stabilize near $72 or stay in whipsaw mode? Macro. Markets are watching upcoming U.S. data and Fed expectations closely to set the tone for January. Thank you for watching, and remember to subscribe for more weekly updates. As always, this is not financial advice. Please always do your own research.